Hi, I'm Tom Lydon, editor of ETF Trends, here in Hollywood, Florida, at the Inside ETF Conference, and I'm here with Matt Tucker, who's in charge of fixed income strategies at BlackRock iShares. Great seeing you, Matt.
Good to see you, Tom.
Fixed income's on the top of all advisors' minds as we're in 2016. Help us out with what are 2 or 3 ideas or strategies advisors should be thinking about today?
Yeah, I mean, I think fixed income is topical right now because there's so much volatility in the market.
Right.
You know, people are concerned about growth, concerned about decline in oil, concerned about just where equity prices are going. And people are looking to fixed income for that safety like they often do. So a couple things we're seeing. So one is we're seeing a lot of money come into core fixed income funds, right? So basic bread and butter, big diversified funds, give you that anchor in the fixed income market that helps your portfolio ride out some of this volatility.
Sure.
The second trend, which is a little more scary, but it's true, is a lot of money into treasuries.
Yeah.
Just plain vanilla US treasuries have been the biggest flow category so far in 2016.
And that's amazing after we just saw a rate hike. Nobody would have thought that one of the best categories of all ETFs would have performed the best when everything else was down.
It's true. I mean, look at the 10-year is just about a 2% yield. So these are not yield buyers, right?
Right.
These are investors who are concerned about their portfolios.
Yeah.
They're looking at the returns for 2015 and saying, I want to take some risk off the table, get a little more defensive, and treasuries are the right way to do that.
High yield's gotten smashed though. Is there value there? Are there buying opportunities there now?
High yield's still a tough call, right?
Yeah.
I mean, for a while it's been the energy story, it's been commodities, metals and mining. I mean, all those sectors that they've declined in the equity market and just kind of globally, they're really hitting the high yield market because a lot of producers are in that sector. But now, we're seeing defaults and concerns spread to other parts of the high yield market. I'm not sure there's value there yet. Yields are hovering over 8%, so for the yield buyer, it looks pretty juicy, but I still feel like there's some volatility ahead of us. Maybe it's not quite time to jump back in.
What about other alternative income strategies? There are a lot of choices out there.
There are a lot of choices, and I think when you think about the year 2016, I think it'll be much like 2015. It's a year where there's going to be a lot of volatility, where you may not have a lot of price return. Income and really yield is going to drive a lot of people's total return and a lot of their outcomes this year. So we still like income-based strategies, municipal bonds, right? Especially for taxable investors.
Sure.
Preferreds, right? As a place to basically go and say, you know what, I'm going to get that equity exposure, but I want to have really more of a tilt towards income and yield because that's probably what's going to pay me this year, given all the volatility.
Right. What about overseas? Are there opportunities there?
Well, the overseas bond market is actually much as challenged as the U.S. market, unfortunately, right?
Yeah.
So yields are generally low. You actually have a lot of foreign central banks, Japan and in Europe, actually in the market buying debt, pushing yields down. I'm not sure there's a lot of value there right now.
Okay.
And outside developed and emerging markets, given what's happening with currencies, it's still pretty volatile.
Right.
So I'm not sure that's quite the place to be right now. I think it's an interesting long-term portfolio play for diversification, but maybe not as a tactical move these days.
Okay, so kind of in the consensus of what you've said, we've got kind of stay away from high yield, kind of stay away from overseas, really focus on the core, which is corporates, preferreds, munis as alternative strategies, and you can't beat treasuries at this point.
That's where we are. Yeah.
Okay. Matt, as always, really appreciate the time.
Okay.
Thank you.
Thanks, Tom.